Jerome Powell dropped some bombshells for investors, in which we will talk about and go over the headlines here in just a moment. But first, we do have some economic data coming out tomorrow morning that will be very important and really, in regards to what Powell said today, be even more important. Now, with that said, we will take a listen to I will at least share with you some of the main headlines from Jerome Powell's speech that took place towards the end of the day today. That happened at 3 p.m. Eastern Standard Time. But I do want to kind of go over the economic data coming out tomorrow morning, because I think that's going to be extremely critical for markets from the perspective of Wall Street has been assuming we are going to have a soft landing. Now, I think the odds of a soft landing have grown. Clearly, with more data, you need to be reevaluating your stance. For a while there in August, or even July, August, September, it was looking real dicey. Unemployment claims are rising. The unemployment rate was rising. It looked like what I was seeing on the ground personally with, retail traffic and restaurant traffic, it was all going down for like months in a row. I think restaurants have been down 4 of the last 6 months, and previously it was 5 of the last 6 months. Just last month's data showed restaurants picked up a little bit, so there was definitely some warning signs. Well, you're starting to see maybe things are not going to continue to get worse. Now, some of the more positive outlook does have to do with revisions, and they can be a little bit flaky. Here this month, gone next month. So that's why I don't want to draw any firm conclusions here. But Wall Street has. Wall Street has drawn the conclusion that we are going to have a soft landing. Now, even if we get a soft landing, which I think the odds of that have grown, like I said, you're going to get waves to this, Waves are ever changing. You're not going to get, in my opinion, a prolonged period in this environment with there clearly is some weakness out there in the economy of just steady growth, right? You're going to have good months and bad months. And you're probably due for a bad month or two of data coming soon. Now, I don't know if it's going to be necessarily between now and the end of this year. It would seem likely with the shopping season that is starting that perhaps you could get some good data, like with retail sales coming out tomorrow for the month of October. It wouldn't surprise me if retail sales come in a little bit better than expected. Not super red hot, but not terrible either, which will likely help reinforce that soft landing narrative. But I do think inevitably, as we start 2025, as we get the holiday season over with, you could start to see some worse data. And that's where I think you get the correction, which could be, if we have a soft landing, the last buying opportunity before we go on a prolonged stretch of I don't want to say optimism or euphoria because that sounds short term, but a longer kind of bull market, a more predictable bull market. Again, if we avoid a recession, there's a case to be had that we've had a rolling recession for years, and maybe things are kind of leveling out now and we get back to something that's more slow and steady. I do not know. I do know with a certainty that we don't know, right? I can tell you with certainty, there is no certainty about what's coming next for the economy. We could plunge into a recession. We could have a soft landing. We could have, up and down kind of growth, right? Good months, bad months. I have no idea. I think the odds are good that things are not going to be great over the next 6 to 12 months, that there will be ups and downs. And with the view of markets, basically everyone's in the soft landing boat. Like, that boat is basically sinking at this point because everyone's jumped in it, that there is room for a bit of a snapback to say, okay, maybe we got too ahead of our skis here. Maybe a soft landing's not guaranteed. And that's where markets will start to say, maybe this valuation doesn't make as much sense as perhaps we thought. Okay, Michael J. Kramer on X says S&P 500 equal weight 2024 and 2025 earnings estimates. Again, this has to be one of the dumbest rallies I have ever seen. And 2024 EPS estimates have been falling pretty much for 2 years now, especially throughout 2024. They were stable a little bit for a while, seen a little bit of a boost, and they recently plummeted right before the Q3 earnings that we just got. And that's why company earnings looked good, because estimates plummeted right before them. Okay, who cares? Wall Street doesn't care. 2025 earnings have also plummeted at the same time, and they continue to go down more so in a straight line. You've kind of seen a bottoming start to happen in 2024 earnings estimates because, I mean, this current quarter, Q4, is the last quarter of this this year, right? So there's a little bit more certainty to what 2024 earnings could look like. But 2025, they continue to come down. As I've said here on this channel many times before, it really doesn't matter in regards to valuations until something changes. Nobody wakes up one day and says, I'm going to sell Apple because I don't like the valuation. Some people might individually do that, but Wall Street as a collective does not do that. Or it would have happened by now. It never happens like that. Apple doesn't just hit a 28 times forward multiple, growing at 5% revenue over the past 3 years, and go, oh, yep, this is it. This is as stretched as the valuation will get. No. But if you start to get concerns about the economy, then valuations matter. Okay? And that's why stocks have done well in recent months, because the economy is surprised to the upside. And in that scenario, valuations do not matter. So what I'm saying here is you probably don't get a correction until something changes for the negative. Because on a valuation basis, you should definitely see big tech trading lower than where it is today. Based on, any valuation multiple you want to do. Price to sales, all-time high. We've never seen a more expensive market based on that metric. Price to earnings, you're almost at the most expensive you've ever been at. Pretty much up there. Like any valuation metric you want to look at says stocks should not be trading where they are. But until something gets worse, until growth slows down or there is concerns or fears out there, Wall Street's not going to wake up one day and care about valuations. That's why I think every piece of economic data will be very important. That is retail sales tomorrow. That is inflation. That is everything. All of it will be very important. Okay, now Jerome Powell just dropped a bit of a bombshell, and let's go over those headlines. Jerome Powell says the economy is not sending signals that U.S. central bank needs to be in a hurry to lower interest rates, so really pushing back on a potential December cut. Jerome Powell said the Fed is committed to finishing the job on inflation. He says, I expect inflation to continue to come down towards the 2% goal on a sometimes bumpy path. He says moving policy over time towards neutral policy path is not preset. Again, kind of pushing back towards December's cut. Jerome Powell says the Fed is closely tracking gradual decline in housing services inflation, which has yet to fully normalize. He says the labor market has cooled to a point where it is no longer a source of significant inflation pressures, and recent U.S. economic performance is remarkably good. Powell says total personal consumption expenditures, price index, likely rose 2.3% in October from a year earlier versus 2.1% in September. Core PCE likely rose 2.8% versus 2.7% in September. He says the labor market is solid, inflation is on a sustainable path to 2%. Powell says economic strength gives the Fed the ability to approach its decisions carefully. He also says the Fed expects these rates to continue to fluctuate in recent ranges. We're watching carefully to be sure they do. So he's really talking about 10-year Treasury yields. He doesn't want to see them this high. Like 4.5% is not where he wants them to be. But he's not concerned unless they stay here for a prolonged period of time. Now, Powell also said the Fed doesn't need to be in a hurry to reduce interest rates. It looks like U.S. short-term interest rate futures are down after Fed Powell's remarks. And it does look like the pricing for December 18th's Fed meeting does show a decline in the probability of another rate cut. As we started today, the probability was 85.7%. This probability did move down to 74.4% with likely further digestion over the coming days, and I would expect this probability is probably going to move down to about 50-50. Okay, because we do have a whole nother set of economic data coming out over the next 5 weeks or so. Before December 18th, we're going to get another CPI report, we're going to get another PCE report, another retail sales report, like literally another one of everything as far as economic data, and that's really going to decide what the Fed does in December. This speech from Powell today really just kind of solidifies the unexpected, right? Trying to not tie the Fed down to either, pausing or cutting rates. It's giving the Fed more optionality. And that's what it looks like today was designed to do for the Fed. Now, stocks did sell off on this because, it does take away some of the bull thesis for investors. If you see a less accommodative Fed, if you see a Fed that wants to be more careful about cutting rates and more concerned about inflation, then one of the main central pillars of the bull thesis is the Fed is reducing rates. They're adding more accommodation, and now that's more in question, and it's more susceptible to the incoming economic data, which does create uncertainty. So let me know what you think about this information down below in the comment section. Have a fantastic rest of your day, and I will see you in the next one.